Hey, what's up everyone? This is Silver Slayer. Thank you for tuning into this video. I wanted to share this important article from Kitco talking about the weak Asian demand reversing gold's rally and prices falling below 1400. The link will be in the description. It just goes a little more into the reasons why silver and gold aren't really appreciating right now. They're pretty stagnant. I made a video similar to this yesterday, but this goes over the Asian market and what's going on that side of the world and just some more context behind the scenes that I think you guys should all be aware of. And also I want to bring some questions to you guys at the end of the video. So anyways, let's jump into this. So gold imports from India and China once again disappointed in August, with the trend likely to continue and begin weigh on prices starting next year, said Capital Economics. So gold imports in China and India remained extremely weak in August, with local currency prices likely to stay elevated. And growth in China is set to slow, and turnaround is a demand in unlikely anytime soon, said the Capital of Economics assistant. China's gold imports tumbled 40% on an annual basis in August. According to the data released by the Chinese Customs Authority on Wednesday, China imported more than 75 tons of gold during the 8th month of the year, which is better than the previous few months, but still very low from a historical perspective. We've talked about silver and gold shortages and production of silver on a worldwide scale being decreased by the hundreds of millions of ounces, and I've mentioned this many times that miners aren't focused on silver as much. They're abandoning silver mines, and it looks like even gold is in that same type of spotlight right now. But anyways, China's imports of gold recovered a bit in the terms in August, mainly due to a pickup in shipments from Singapore and Switzerland. However, in year-on-year terms, imports fell sharply 40%, which is a lot. That's nearly half the amount imported. On top of that, jewelry sales and withdrawals of gold from the Shanghai Gold Exchange were both below their seasonal norm in August, and higher gold prices and slower economic growth in China are to blame for lower gold imports. And this continued to say, we think that the two main factors are behind this broad-based weakness. One is the recent surge in the local currency price of gold on the back of the rally in the dollar-denominated price, gold price, and the sharp depreciation of the renminbi. The other is a general slowdown in economic growth in China, which has dampened consumer demand for gold. So these are two really important things to talk about. So, local currency price of gold on the back of the rally. So, as gold is rising, it is becoming more expensive, and people aren't the one that people like to buy low and sell high. Now, their currency right now is also in a weird spot. People aren't looking at, or they aren't investing as they usually would, because they're thinking they missed the boat. It's almost too late, and a lot of gold that's being imported isn't being bought or sought after at the rate that it usually is. And as imports slow down, it's even less, it's a less circulating, asset. So it's a really weird situation to be in. But also the when they mentioned the general slowdown in economic growth, so the economy in the society is kind of taking a step back, and they aren't investing as they usually would. India's gold imports are also plunged, falling 73% in August, touching 3-year lows as the country only imported 30 tons. And I've talked about, right here it says 3-year lows. So this is important, because when I made that video talking about the miners and the gold production, or the silver production in the world, the top 3 silver and gold producers, Mexico, Peru, and Chile, all have been cutting back precious metals circulation or production by a lot. I'm talking hundreds and hundreds of millions of ounces in the past 3 years. They've been decreasing this. So there's not as much silver and gold being dug out of the ground right now. But also, if this is true, which is touching 3-year lows on gold imports, then this is a very, very, very low ratio, and surplus for precious metals is dropping extremely fast. Surging local currency prices also weighed on gold imports in India. Admittedly, the hike to the import duty on gold at the beginning of July probably led to an increase in gold smuggling in recent years, or in recent months, which is interesting because the smuggling would mean it's going undetected and it's not being, stated and written in these ratios or reported. So that could also highly affect the price. And also, when smuggling, you can usually get it cheaper. A lot of it is misprinted bars, like JP Morgan just got caught with $5 million in misprinted bars. So there's a lot of shady stuff going on. That could also be why these reports or these stats are a little off balanced, because there could be more import, or there could be more gold being imported, but it's just not being documented, so the stats would be lower. However, we suspect that the government measures kept smuggling well below previous peaks, which means the gold import figures probably are only slightly overstated. So they just mentioned there that they have been doing a better job at keeping track, so the ratios probably aren't that damaged or dampered by this, but I definitely still think that it could be a possibility. And when you hear these articles from JP Morgan and Merrill Lynch, there's so much shady stuff going on behind the scenes. I would not be surprised if it's a much larger operation than they're giving credit due, saying, oh, they take care of it well. Well, there's a lot of people, and there's also the unknown factor. You don't know this, because there could be a much larger operation of smuggling of imported precious metals that people aren't documenting, that they're not even aware of, to even know the extent of it and how much it's affecting prices. All they can do is look at the historical data of it, saying, okay, well, there is some here and there, but what if there's even a bigger operation, which also could be the reason for the largely depreciating production of precious metals on a worldwide scale being imported and exported. So and then if you apply that to the miners as well, that aren't focusing on precious metals, or focusing less and less on silver every year, this could all see as a surplus or a shortage happening. I mean, we saw the shortage earlier this year. We've seen the last 3 years the production's been getting cut back, and then you see these imported and exports being decreasing in demand. And if the supply stays rising as precious metals keep growing popularity, as media covers it, as stock market volatility, as the U.S.-China trade wars, as the Iran tensions, the Hong Kong protests, the 2020 presidential election coming up, this could all be stuff to rise the demand as people turn towards precious metals for safe haven investments. But if the supply isn't there to meet it, then you could see what happened. And on a global scale, who knows how big this could be. So anyways, what this means for gold prices going forward is the rally is likely to reverse, and prices will decline back to the $1,350 level by the end of the year. Soft consumer demand will weigh on the price of gold over the coming year. This, together with our new view that the U.S. Treasury yields will rise further as the Fed disappoints investors' expectations for aggressive easing, talking about the Federal Reserve cutting interest rates. So underpins our forecast for the gold price to drop back to $1,350 per ounce by the end of 2020. Now, they're not. The thing about this article is they're not incorporating some huge factors that are highly going to be influencing silver's price and gold's price. I made a video a couple of days ago talking about how to predict silver's price, or where it's headed, and I named 15 different things. Some of them being supply and demand, surplus, the political standpoint of it, economic insecurity or economic scare, the demand, like where media is covering it, if people see it as profitable, or if they see it as non-profitable, depending on whether, or that will be deciding whether they're buying or selling. But also you have to look at this as well. Right now, even if something as small as a U.S.-China trade war could spark prices that high because they turn towards something that's safe, that has real value, then imagine something as big as the 2020 presidential election or Trump's impeachment. This stuff is huge news that would highly put an effect on the economy. No matter what the result of the presidential election is, there's going to be riots. There's going to be a lot of controversy. This is going to scare a lot of people. People don't trust banks or governments, especially during those times, and they're going to turn towards precious metals. So regardless of whether prices are staying low or high right now, there's many factors in the future. Federal Reserve interest rates could be some of it, but you still have to think about all of the other factors as well. This could not be an accurate assumption. I definitely think that precious metals have a lot of potential coming up, and I'm not just saying that because I love silver. I'm looking at it realistically. Something like stock market volatility and the U.S.-China trade wars boosted precious metals almost $2 within a week. It was stuck at $17 and it bumped up to $19.50. So something bigger than that could easily affect. And then if you're talking about supply and demand, demand is going to be growing and growing as silver becomes more profitable. And then you have to look at the supply. If the supply can't meet the demand, and what does that do? Low supply, high demand, it shoots the price up. Right now, silver supply is obviously, looking at this, the stats, the information given is extremely low for gold and silver at very, very, very low levels. Over the past 5 years, this is the least amount of imported gold and silver we've had by far, by the hundreds of millions of ounces. So if demand does start rising and people do start purchasing it or seeking it out, especially from not only just the physical bullion standpoint, from the digital side, the ETFs, this could be a huge problem, which could highly cause precious metals to spike in price as people want it, but they can't fill that demand. They can't fill the supply. And this could be something that many people don't incorporate. So not only talking about the surplus, but also the political standpoint, also the unknown factors, the unknown variables that we don't even know will be happening that could be affecting the price, but also with all the other things in the economy that are happening as well. So anyways, I'm curious what you think about this. Like I said, the link will be in the description if you want to check it out for yourself. What do you guys think about this? Do you guys think prices are going to be steadily moving upwards, or do you think there could be a major pullback to the $1,350 range, meaning silver be around high 16, low 17s? I'm curious what you guys think. I definitely don't think that's going to be the reality of it. I think precious metals have a lot of potential. This article was written yesterday, so it still is fresh off the press. It's not like they wrote this, when silver was stagnant in that $17 range. This is even in the midst of everything going on. So I'm really interested in what you guys think. But anyways, I do appreciate you guys for tuning in. Make sure to smash that like button, subscribe if you're new. I do post daily videos. This was Silver Slayer. I will see you guys soon. Peace.